Hi, everyone, and welcome to another episode of the Clopton Capital CRE podcast. Today we have Nick Keys. Nick is a principal and shareholder in the Dickman Company, the largest industrial real estate brokerage firm in the state of Wisconsin. Nick specializes in industrial real estate brokering with a focus on investment sales, value add redevelopment, and lease negotiation. In addition to that, Nick also actively syndicates and invests in industrial real estate projects in southeastern Wisconsin. So, Nick, listen, I appreciate you jumping on. Really want to thank you, and it'd be great if you kind of give us a background on yourself and kind of how you got started at Dickman Company, and we can start up there.
Sure. Well, thanks for having me, Jake. It's a pleasure to be here. So I got started in industrial brokerage about 9 years ago now. I originally went to UW Milwaukee, went through their real estate program, came out and, wanted to get involved in the community. So took a position here at the Dickman Company. So as you alluded to, we are the largest industrial real estate brokerage firm in Wisconsin. We have 10 active brokers, and we do everything from brokerage and lease up through new construction. And when I originally came on, I was involved as a sales agent and eventually got my brokerage license and became a partner and a shareholder. So it's been quite the trip, but it's been a great journey. I currently live in the suburbs just outside of the city with my wife.
That's great. So listen, I think I would really love to hear about how things have been going with you guys, over really the past 2 years, right? Like what was business like in industrial in, Wisconsin and Milwaukee kind of before the pandemic, and then kind of like walk me through how, that evolved as the pandemic was happening. And then now that we're coming out of it, right? Like how is activity and how are things going today?
Sure. Well, I think we're all excited to be coming out of it, right?
Yeah.
The industry here is primarily manufacturing. So the majority of our industry in southeastern Wisconsin revolves around manufacturing and industrial services. And when COVID hit, in March of 2020, things came to a halt for about a month or so. Everybody kind of took their foot off the gas and was evaluating and kind of watching the news and seeing what was going on, but no one really stopped totally. Being in manufacturing, we are the guys that turn the gears, right? So transportation, distribution, people making PPE, that all continued. And that workforce is located, in this part of the state. So it was great to be able to help all those guys, as we kind of worked our way through quarter 2 and quarter 3. It was, day to day, what's going on. Everything was constantly changing, but we continued to, service our clients and, help meet their needs, whether that was go out and find new space or, maybe come up with a plan to put an addition on to, handle some of this increased demand.
Okay, got it. So what have you kind of seen happen lately? I mean, is activity higher than it was kind of pre-pandemic, and what's it kind of like now?
Sure. Increase in demand. Absolutely. So as things kind of came back online at the later part of the year last year, there was absolutely a K-shaped recovery, right? There was a big part of our business that absolutely went through the roof. A lot of these guys, they are supplying the e-commerce industry, right? So as the population began to order more online, these guys need more warehouse space, they need more trucks, they need more of everything, right? So we've seen a big boost in sales and in leasing, and we expect that for the next couple of years here.
Okay, got it. So when you say K-shaped recovery, was it like a lot of the space and activity you're seeing is in like logistics and warehouse space versus just straightforward manufacturing space, or was there another area that has been depressed since the pandemic?
Sure. So I would say maybe 20% of our clients, more so related to manufacturing, we would call them a job shop, or somebody that's just doing general assembly. Those guys struggled quite a bit last year. A lot of those orders were turned off or delayed, postponed, and those guys, without making an actual product or a widget, they kind of found themselves, without a lot to do. The other 80% are, making specific products, or they are, like I said, in the distribution or transportation industry, and they've been expanding it as quickly as they possibly can.
Oh, wow. Okay. Got it. So is a lot of the industrial space in, the Wisconsin area, is there a lot of like, I would say like institutional quality tenancy there, or is a lot of it's kind of small to middle market companies that, are occupying, I don't know, up to like 100,000 square feet at most, something like that?
Sure. Most of it's going to be, small to mid-range, mid-cap companies. We do have, a handful of larger names here, Fortune 500 groups. But most of the real estate that you find is going to be less than, let's say, 200,000 square feet. There is only a handful of, buildings in this part of the state that are, over 1 million or over 1.5 million square feet. So yeah, we tend to be a smaller market in terms of square footage and overall size.
Got it. So obviously in industrial right now, like everywhere, right? It's very hot. There's a lot of investor demand. Are you starting to see a lot of like outside investors that you haven't seen before coming into your market, kind of looking for yield, like guys from, either the coast or something like that, like that type of institutional like money, like chasing, either cap rate or yield, or kind of looking for kind of product that people haven't discovered yet? Have you seen that coming into where you guys are? Like
Absolutely.
More so than before?
Absolutely. So it was happening before the pandemic, and then it was, multiplied tenfold through the pandemic here. Everybody on the East Coast and West Coast is okay with, 6-7% return on their money, and they can come to, the Midwest and, see cap rates push 8-9. So yeah, we've seen a ton of interest, especially in the last 12 to 18 months. Industrial has been a great asset, right? I mean, it's very stable, it's dependable, and our leases tend to be somewhere between 7 years and 15 years, so a group can come in. It's relatively, easy to manage. Most of the leases here on investment transactions are triple net or absolute net. And there's a lot of activity from out of town groups to take advantage of that.
Got it. So are you starting to see kind of local guys starting to get pushed out a little bit because, things are going for lower cap rates than they're used to, right? And I'm sure they're saying they're crazy, right? But, it is what it is. You're starting to see some of that happening.
Yeah, it's much more competitive than it was. When I got into the business 8-9 years ago, it was pretty much only local investors. There was a handful of institutional groups that, kind of played in some of the bigger properties. But we've really seen that change within just the last few years, which it's a good opportunity for, local investors to spin off, some of their holdings, and gives the out of town guys opportunities to come in, but makes it much tougher for a local investor to find value in today's market.
Right. I mean, I assume to a degree you're starting to see some like owner occupied real estate, probably looking at like sale leasebacks or something like that, just because, the cap rates are so low now. I'm sure it's a great way to raise capital or kind of divest some of their assets. Like
right.
That.
Yeah, sale leasebacks have become much more popular within the last maybe 5 years here in this market. A lot of that is not only due to interest rates and the cost of money being low, but private equity coming to town. Wisconsin, this part of the state, we have a lot of, call it mom and pop businesses, manufacturers and distribution companies that are, let's say, between $1 and $10 million. And when those companies, go up for sale, a lot of times the groups that are purchasing them, they don't necessarily have a need for the real estate, or I should say to own the real estate. So it creates a good opportunity for an investor, either local or institutional, to come in and purchase a nice asset with a great lease on it.
Got it. So you mentioned that you guys are also buying and syndicating industrial real estate. Where, I don't want you to give away too much of your secret sauce, but where are some of the areas that like you guys are still able to find activity, right? With private equity money coming in and institutional money coming in, like chasing deals. I mean, obviously I feel like anything on LoopNet or 10X or whatever, right? I mean, that's going to be pretty picked through. But like where are some of the areas you guys are able to find value?
So a big advantage for us is the fact that we have 10 active brokers, right? So we have awesome market coverage. We're, the largest shop in Wisconsin as far as industrial brokerage goes. There's obviously other groups in town that will do office and retail and industrial, but we are very niche in the fact that we focus specifically on industrial. And so being out in the market and then, trying to develop the relationships with the business owners, before the transaction occurs has been crucial to our success. We actively cover probably about 500 million square feet. If you go up into the northeast corner of Wisconsin, down into the southwest corner, and then back to where we are here in Milwaukee, we have a nice kind of pool of industrial, and we're out there, working every day.
Okay, got it. So, right, I mean, so that kind of begs the question, like, how can, not private equity guys, right, but like, how can private investors, really get involved in this market and get an edge? I mean, is it really like, I don't know, finding off-market deals or direct, like approaching owners directly, or kind of aligning with a group like yours to go find them off-market deals, or syndicating and how does somebody get involved in industrial today and not kind of get squeezed out by private equity returns?
Sure. I would, recommend trying to develop a relationship with a broker or a few brokers. I mean, obviously, if you come to town, we'd love to sit down and chat about what it is that you're looking for. But being able to put a face with the name is huge. So we have groups that come into town from time to time. We'll go and we'll have coffee or grab lunch or something like that. And being able to develop a relationship, where I know who it is that's on the other side of the phone, I can put them in touch with lenders here. I can help them make those connections. It helps, develop a relationship that you want to make a deal with them. It's one thing to get a random call from a group on the East Coast and they say, send me everything you got, right? It's another thing for them to come to town and get to know them. Right. Maybe it's the Midwestern mentality, right? You want to be friends with the people you do business with, but it's true. The people that make an effort, usually are the ones that find the deals.
Yeah. And I mean, I think that's true, right? I mean, we kind of get called the same way, right? Where guys are just kind of like mass marketing deals or email black, and you don't really pay attention to those, right?
Right.
It's kind of a black hole and you don't really expect much to come out of it. So yeah, I mean, I definitely think that's, that's a good strategy to, come in and put the boots on the ground. And, so are you, as far as like, I guess here's another way of looking at it. I mean, are the sellers in your market, I mean, do they, are they seeing private equity money coming in, or like larger shops coming in and chasing that money? Or, you know what I mean? Like, what are they looking for in buyers up front, right? I mean, as far as like proof of funds and financing and closing and stuff like that, or are they just really after the top dollar?
I mean, as most people are, the money talks, right? So the top offer is typically the winning bid. But again, going back to that Midwest mentality, a lot of these guys want to know who it is that they're dealing with. It's one thing to receive a high offer from, somebody that you've never met before. It's another thing to get an offer from, somebody that or have been referred into. I'll tell you that investors who are able to bring proof of funds to the table, potentially work with a local lender, those things go a long way with our sellers. They want to be able to make a phone call, have it picked up on the first or the second ring, and talk to their landlord, right, or talk to the investment group that's going to be purchasing the real estate.
Right, and I'm sure. To a degree, right? I mean, if, let's say if like a guy's doing a sale leaseback, right? He's got to kind of in the unique position to choose who he wants as a landlord, right? And I mean, if you're like, who do you want as a landlord, right? I mean, a guy you can call up and talk to, or, XYZ equity company out of, somewhere in the Northeast, right? Or California, right? I mean, I'm sure that makes a big difference to them.
Right.
That's interesting. So are you guys primarily stick to Southeastern Wisconsin, but are you starting to creep into some of the other areas around like Northern Illinois or like any other markets in the US?
So on the new construction side, we are. So that's a piece of the business that we've been growing over the last 6 or 7 years here. We build new industrial to suit and on spec. So the spec projects have been primarily here in southeastern Wisconsin, but we've been doing a few build to suits out of state, and we're actively looking at proposals for additional properties. So that's one way for us to, kind of get out further beyond our, home market here and help develop some of those relationships. The demand is just tremendous. So as vacancy rates have, continued to be historically low, new construction is really the only way to solve that. And we're, out actively looking for new opportunities.
Right. Yeah. Like, what are some of the other markets you guys are seeing a lot of activity in? I mean, obviously there's easy ones to pick out, right? Somewhere in the Sun Belt, but I mean, we're seeing a lot of activity like in Nashville. It's not far from us, right? And just, there's a lot outside Chicago. There's a humongous need for logistical space, and Amazon warehouse, stuff like that. Like where are some of the areas that you guys have looked at doing business?
So we have an active project in Cleveland right now. We were just looking at an opportunity in Columbus. We've started to deep dive into the St. Louis market. So, we prefer the Midwest. You're not going to probably see us out in California or, down in the Florida markets or anything. But, we have an appetite to, get bigger and do larger deals. It's just we're still trying to figure all that out.
Right. That's interesting, man. Well, tell me, like, what are some of, I guess ways, if you're a smaller investor, and you're looking to get involved in like, in industrial real estate today. I mean, it's tough to be the only guy, right? But if you're, I know you guys syndicate deals. Like, if you're an investor looking at syndicating a deal or getting involved in one, like, what are some of the things that you should look for in A, a syndicator, and B, like, the projects you're getting involved in?
Sure. So I would first ask yourself, why do you want to be involved in industrial real estate? It's not always the sexiest asset class, but it is very dependable, right? It's very stable. It offers a great solid return. But going back to our what we talked about previously, try to make an introduction, right? Try to reach out to, a broker in the market you want to enter, or a syndicator, that's got a good reputation, and, see if you can meet them for coffee, right? Or, have a conference call or, a Zoom call, whatever it may be, and help learn a little bit more about, their market in particular. The cap rates that we see here, or the styles of buildings, or the things that are important to the tenants in this market can be drastically different. You're sitting down in the greater Chicago area. Parking is one of the most, important things that you can find in, an asset down in your market. Up here, it's not really that big of a deal, right? A lot of the buildings were developed and they have ample land to expand. And, based on how the industrial parks are laid out with access to transportation, it's really not as important here. But that's not something that the average, investor or the first-time investor would know without, doing a deep dive into a specific market. So I would encourage you to get out and, talk to somebody, whether you find them on, LinkedIn or a meetup or whatever it may be, and, try to ask very pointed questions, relative to the market.
Got it. So really just understanding for themselves what they're getting into versus kind of just going along the ride with whoever the syndicator is, right? I think that's right. That's probably some pretty good advice for anybody looking to get involved. So, Elizabeth, I appreciate you coming out. Give me an idea of like what's kind of the next steps for you guys. Is it you're going to look into new asset classes, new markets, or is it expanding what you're doing locally? Or give me an idea of what's in line for the future for you guys.
So I think we would like to continue expansion of our new construction. We see the development side of the business as, the way to help better serve the market, right? I mean, we're extremely client focused. We always want to, put our clients first and do what's in their best interest. And if they can't find what it is they're looking for, we should go out and build it for them. So we want to, continue expanding upon that. As far as coverage goes, maybe we'll move farther out into the greater state of Wisconsin. The concentration of industrial real estate tends to be in this part of the state, but there's some great pockets throughout where perhaps we would add a satellite or have some more coverage in.
Got it. No, that's great. Well, Nick, listen, I again appreciate you coming on. How can people get in touch with you? I mean, I'll put your information, alongside this video, but how can people get in touch with you if they want to chat or just pick your brain or ask questions?
Sure. Yeah, you can find me on LinkedIn under Nick Keys. Otherwise, my email, nick@dickmanrealestate.com.
Sounds great. Well, again, Nick, thanks so much, and we'll catch you guys next time. Thanks again.
Sounds good. Thanks, Jake.